On March 6, 2025, President Donald J. Trump signed an executive order establishing the U.S. Strategic Bitcoin Reserve and a separate United States digital asset stockpile, marking a seismic shift in the federal government's approach to cryptocurrency. Hailed by supporters as a visionary move to position the U.S. as the crypto capital of the world, the initiative has sparked intense debate among economists, crypto enthusiasts, and skeptics alike. Trump's plan leverages Bitcoin and other digital assets already in government possession, primarily seized from criminal enterprises, rather than committing taxpayer funds to new purchases. But what if the true scope of these holdings is far larger than publicly acknowledged? What if the U.S. government, sitting on a hidden stash of Bitcoin, aims to inflate its value exponentially, perhaps 1,000 to 2,000 times higher, before cashing out to tackle the ballooning national debt? This article explores the origins of the Strategic Bitcoin Reserve, the government's existing crypto holdings, and a provocative theory that this could be the setup for the greatest pump and dump scheme in financial history. The genesis of the Strategic Bitcoin Reserve, Trump's fascination with cryptocurrency, emerged prominently during his 2024 presidential campaign. Once a vocal critic who called Bitcoin a scam in 2021, Trump reversed course, embracing the crypto community with fervor. He spoke at the Bitcoin conference in Nashville in July 2024, promising to make the U.S. a global leader in digital assets. His campaign received millions in donations from crypto investors, and he launched a meme coin, Trump, signaling his personal stake in the industry. By January 2025, as he assumed office, Trump's rhetoric crystallized into policy. The executive order he signed established the Strategic Bitcoin Reserve as a digital Fort Knox, a permanent stockpile of Bitcoin to mirror strategic reserves like gold or oil, while the digital asset stockpile would hold other cryptocurrencies like Ethereum, XRP, Solana, and Cardano. The White House, through crypto czar David Sachs, emphasized that the reserve would be capitalized solely with assets forfeited in criminal and civil proceedings, earning approximately 200,000 Bitcoin, valued at $17.5 billion as of March 2025. This figure aligns with estimates of U.S. holdings from high-profile seizures, including the Silk Road takedown in 2013 and subsequent law enforcement actions against drug dealers, hackers, and money launderers. Unlike proposals from figures like Senator Cynthia Lummis, who advocated for the government to purchase 1 million Bitcoin over 5 years, Trump's plan avoids new spending, a move praised by some as fiscally prudent, but criticized by others as unambitious. Yet, the official narrative raises questions. If the U.S. already holds 200,000 Bitcoin, could the true number be higher, perhaps 500,000 or more? And could the government possess even larger, undisclosed wallets from the early days of Bitcoin, seized from shadowy figures and never reported? To answer this, we must delve into the murky history of government-held cryptocurrency. The government's Bitcoin hoard, Ross Ulbricht and beyond. The U.S. government's journey into Bitcoin ownership began in earnest with the 2013 shutdown of Silk Road, the infamous darknet marketplace founded by Ross Ulbricht. Operating from 2011 to 2013, Silk Road facilitated billions in illicit transactions, drugs, weapons, and hacked data, using Bitcoin as its currency of choice. When the FBI arrested Ulbricht, they seized approximately 144,000 Bitcoin from his personal wallets, worth $28.5 million at the time. Today, at a price of roughly $87,500 per Bitcoin as of March 14, 2025, that haul would be valued at over $12.6 billion. The Silk Road investigation uncovered additional Bitcoin tied to the platform's operations. In 2014, the U.S. Marshals Service auctioned off 29,657 Bitcoin seized from Silk Road, followed by subsequent sales totaling over 144,000 Bitcoin from related forfeitures. However, reports suggest the government retained significant portions of these assets. A 2021 forfeiture action recovered an additional 69,370 Bitcoin stolen from Silk Road by a hacker, pushing known government holdings higher. Some estimates based on blockchain analysis and public records place the U.S.'s Silk Road-related stash at around 211,000 Bitcoin, slightly above the 200,000 figure cited by the White House. Beyond Silk Road, the government has amassed Bitcoin through a decade of law enforcement actions. The 2016 Bitfinex hack saw 94,000 Bitcoin recovered in 2022, worth $3.6 billion at the time. Seizures from drug, trafficking, rings, ransomware operators, and money laundering schemes, like the 2023 chip mixer shutdown, which laundered $3 billion in crypto, have added tens of thousands more. The U.S. Marshals Service, tasked with managing these assets, typically auctions them off, but not always immediately. Could some of these holdings have been quietly retained, building a stockpile far larger than admitted? Here's where speculation deepens. Bitcoin's early adopters included criminals who mined or acquired millions of coins when they were worth pennies. If the government seized one of these original wallets, say from a drug lord or hacker in the 2010s, it could hold millions more Bitcoin, hidden from public view. Blockchain's transparency makes such secrecy challenging, but not impossible. Coins could be stored in cold wallets, obscured through mixing services, or simply unreported. If the U.S. controls 500,000 Bitcoin, or even a few million, the strategic Bitcoin reserve could be a Trojan horse for a much grander scheme. The pump inflating Bitcoin's value. Trump's executive order doesn't just formalize existing holdings, it signals a new era of government-backed legitimacy for Bitcoin. By classifying it as a strategic asset akin to gold, the U.S. could drive institutional adoption and global confidence, pushing Bitcoin's price to unprecedented heights. During his campaign, Trump vowed to never sell the government's Bitcoin, a stance echoed in the order's directive that the reserve remain a permanent holding. This hodling strategy could act as a catalyst encouraging pension funds, sovereign wealth funds, and corporations to pile in. Imagine Bitcoin's price soaring from $87,500 to $87.5 million, a 1,000 times increase, or even $175 million, a 2,000 times jump. Far-fetched? Perhaps not. Bitcoin's capped supply of 21 million coins, with over 19 million already mined, ensures scarcity. If the U.S. hoards 500,000 Bitcoin, or 2.4% of the total supply, or more, its refusal to sell could tighten circulation, amplifying scarcity-driven price spikes. Add geopolitical clout, Trump's vision of the U.S. as the crypto capital, and Bitcoin could eclipse gold's $15 trillion market cap, reaching valuations in the tens or hundreds of trillions. Crypto advocates like Tyler Winklevoss argue Bitcoin is digital gold, a hedge against inflation and dollar weakness. Senator Lutz, in her 2024 Bitcoin Act, claimed a 1 million Bitcoin reserve could halve the U.S.'s $35 trillion national debt in 20 years through appreciation alone. If the government secretly holds millions of Bitcoin, the timeline could shrink dramatically. A 1,000 times pump to $87.5 million per Bitcoin would value 500,000 BTC at $43.75 trillion, enough to wipe out the debt and then some. A 2,000 times pump to $175 million per coin would yield $87.5 trillion, dwarfing the U.S. economy itself. Here's the twist. What if the strategic Bitcoin reserve isn't about long-term holding, but a calculated exit? The national debt, at $35 trillion and climbing, is a fiscal albatross. Traditional solutions, tax hikes, spending cuts, or borrowing, face political gridlock. Selling a massively inflated Bitcoin reserve could offer a radical alternative. If the U.S. dumped 500,000 Bitcoin at $87.5 million each, it could net $43.75 trillion, erasing the debt and funding Trump's agenda, tax cuts, infrastructure, or even a crypto-fueled economic boom. This would be the dump in the greatest pump and dump ever. Pump and dump schemes involve inflating an asset's price through hype or manipulation, then selling at the peak, leaving latecomers with losses. Here, the U.S. government could leverage its authority and holdings to pump Bitcoin, only to liquidate at an astronomical valuation. The fallout would be catastrophic for retail investors, institutions, and foreign governments who bought in at the top, but the U.S. could emerge debt-free, its financial dominance reinforced. Critics like economist Paul Krugman have called the reserve a potential rug pull, warning that government intervention could distort markets and lock the U.S. into a volatile asset. Cornell professor Eswar Prasad notes that liquidating such a large holding could crash Bitcoin's price, undermining the plan. Yet, if timed strategically, say over years, masked as routine sales, the dump could minimize blowback while maximizing returns. Ross Ulbricht's shadow, a symbolic link. Ross Ulbricht, pardoned by Trump in January 2025, looms large in this narrative. His Silk Road Bitcoin seeded the government's hoard, and his release fulfills a campaign promise to crypto supporters. But could Ulbricht's story hint at deeper motives? If he once held 144,000 Bitcoin, or more, as some speculate, his pardon might be a signal to the crypto community the U.S. is serious about Bitcoin, even as it plots to exploit it. Legal experts say Ulbricht can't reclaim his seized assets, but the symbolism of freeing him while hoarding his coins adds intrigue to the pump and dump theory. This theory isn't without holes. First, the logistics of hiding millions of Bitcoin are daunting. Blockchain's public ledger would likely expose such a stash unless expertly concealed. Second, a 1,000 times or 2,000 times pump requires global buy-in trillions in new capital, beyond the U.S.'s control. Third, dumping 500,000 Bitcoin would flood the market, crashing prices before the debt is fully paid. Finally, Bitcoin's ethos of decentralization clashes with government manipulation, potentially alienating its base and triggering a backlash. Economists argue Bitcoin's volatility makes it a poor debt solution compared to stable assets like gold, which the United States holds 8,133 tons of, worth $650 billion. A reserve of 500,000 Bitcoin at current prices is just $43.75 billion. Significant, but a drop in the debt bucket. Even at $1 million per Bitcoin, it's only $500 billion. The pump and dump scenario demands a leap into uncharted financial territory, risking economic chaos if it fails. If true, the strategic Bitcoin reserve could redefine global finance. A debt-free United States, flush with crypto profits, could wield unmatched economic power, sidelining rivals like China, which Trump has accused of crypto ambitions. It might also set a precedent for other nations, sparking a Bitcoin arms race. But the cost, market instability, eroded trust in crypto, and potential losses for millions could outweigh the gains. Alternatively, Trump's plan might be simpler. A genuine bid to legitimize Bitcoin, boost United States innovation, and hedge against inflation. The 200,000 Bitcoin figure could be accurate, with no hidden millions or grand dump in mind. Yet the opacity of government holdings, combined with Trump's flair for bold moves, fuels speculation that something bigger is afoot. Conclusion: a crypto conspiracy or a new frontier? As of March 14, 2025, the strategic Bitcoin reserve is in its infancy. The White House promises transparency, with a working group tasked to refine the policy. Whether it's a modest stockpile of 200,000 Bitcoin or a secret trove of 500,000 or millions, the implications are profound. If the United States pumps Bitcoin to stratospheric heights and dumps it to erase the national debt, it would be a financial maneuver for the ages, blending genius with audacity. For now, the truth remains elusive, buried in blockchain shadows and executive orders. One thing is clear: Trump's crypto gambit has only begun, and the world is watching.